Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, March 29th, 2023. Not sure what to say, but I mean, things are pretty much going exactly as we've been roadmap, and all the way, this is where things got a little dicey, but after that, we ended up everything being fine, meaning that when we came down, we were two-thirds long right here and we had this really, really nice bounce up and we closed it right almost at the exact top, only a third of it, and then bought bought it back here. And we this is when that whole banking it just a little crisis went down, and this definitely took me a little bit by surprise. But being we know that we're in a longer term bullish time period, longer term meaning anywhere from 3 to 6 weeks, but in any case, you don't panic on these. What happens is you just sit there, wait for the some support to hold and the bulls to show some type of life. Wait for the big move up, and then wait for the drop, and then you start buying on the dips. So we had we got up to here. We actually took another third off, and again, what I mean by like when we have the longer trend to say that's up into the time period that Woody's looking for a top. But during that time, we're going to get these big moves up and down. It's just going to be in the direction like this. Just like this was our topping to call, and we had big moves, but the overall trend was down. The same thing is going on now, and that's why you don't panic. You just wait for things to settle up. Let everybody get in their head as far as why this market can't go up, and they'll short each one of these rallies. And right now, if we break above this 40.35, we're going to get a quick move up to the 40.80. And if it gets above that, all the people that were shorting here, all the people that were shorting anywhere here with these big drops, they're going to be forced to cover. And we're going to see a quick move up to the 41.60, even up to the 4200. But the way that I like to do this is that if we do get a break above the 40.40 here. I'll probably take some off at the 40.80. It's going to be our, over 100 points on the upside. And when you look at the SSO from there, that's going to be up for another like 4% from where our average buy-in is. So if we get up here, I'll take another third off and just run with a third. If we continue higher, then I just run with that final third, because most likely that's going to be we're going to get this big short covering right when we're going to be coming into our next top date. And like I said, these cycles, they don't disappear. They come in and month out. Sometimes they go a little bit longer than a month. They could range from anywhere to 4 to 6 weeks, and if it gets stretched, then it goes into 8 weeks. But the thing is that if you know the trend that we're in, and you just from, let's say, our predictive analytics model, which we know from this, is really bullish from right around this time period. So what happens when we go lower? You kind of get even more bullish, and you average in at a better price, even though as scary as it was, and everybody, like I said, was believing, they still believe that there's no way this market could go up because of this, the banking crisis that we're in. But the thing is, they're going to be the one. They're going to be right, but they're going to be right when they're covering their short positions up here, and that's when we're going to be looking to go on a. That's when we're going to be shorting. So when they're panic selling to get out of their short positions because their emotions are taking control of them, we're going to be using those to fill our trades at near the top on the short side. So we maybe we layer in, but we just know that it's going to be tilting over, and then the next cycle is going to be to the downside. So that's really the way this game is played. It's pretty stress free. Even when you get caught with something like this little this little kind of hiccup where it was unexpected banking crisis, you still know that the trend is up on it, so you don't panic. Right here, everybody got as bearish as they could, and it was zero, I think 1% bullish, and that was it. That was the end of it, and we just continued higher. So this is the thing. On the hourly chart, there are some, like, a little bit of a bearish divergence here, but I think it's going to fix itself. I wouldn't be surprised to see us open up close to this 40.80, say in the first hour or so, testing up here. And then that's going to allow us to have a little bit of a pullback down to support and then back up again. Now, there's a chance that we do kind of come down a little bit first and maybe test this 44, the 4,000 level and then head up. And that's because on the short term charts here, we are showing some sell signals. So I'm honestly on the side that we've done very well with this. If we get, anywhere up into these levels, either the 40/40 or up to the 40/80, we take another third off. We're only running with a third, and that's going to be we've traded this three different times. We had two-thirds of a position, closed a third here, ended up having two-thirds, got caught on this. But then when we got back up to these levels, this is when when I took that third off and then bought back and then bought back. And that's really the way this is. You're looking to buy dips at the support levels. And, yesterday was a little bit of stress when instead of it went going down to the 39.60, went down to the 39.51. But anybody that bought from there, you can see the gains that they're in. Now, if you just want to take a look at what happens with the instruments that we trade, let's just take a look here. And this is the SSO. So from this level, and I do know somebody that bought at this level, right near the 46.61. I mean, you're up almost 4% already, 5%, and that's in one day on it. So it's there's a lot of money to be made with trading these ETFs. And once we're ready to switch to the short side, then we go to the SDS, which is going to go up as the S&P goes down. So that's really about it. I think that we've been doing the right thing. We want to layer out another third, whether it be at the 40/40 or up at the 40/80. If we come down, we want to keep an eye on this 4,000 level, because that's where I would expect buyers to be defending. If they don't, then there's a good chance we come down and close this gap. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.